All right, welcome to Market Pulse. Let's cut right through all that market chatter, okay? In the next few minutes, we're going to focus on the one skill you really need to navigate all this, telling the difference between the signal and the noise.
You know how it is. Every single day, you're just hit with this wall of headlines, opinions, and let's be honest, a lot of panic. But our job, right here, right now, is to separate that fleeting noise from the signal that actually matters. And to do that, we need to start with a really core concept.
And this saying? It absolutely nails it. I mean, you can watch the Asian markets close down, you see Europe in the red all morning, and you think, okay, I know how this day is going to go. But then, bam, 9:30 a.m. in New York, the bell rings, and it's like a whole new day. The trend can just completely flip on a dime. The big takeaway here, don't get too caught up in that pre-market drama. The real story, that usually starts when the U.S. market opens for business.
Okay, so keeping that in mind, let's dive into U.S. stocks and see if we can find the real trend hiding underneath all that daily turbulence.
So this really frames the whole idea perfectly. On one side, you've got the noise, the day-to-day political stuff. You hear about some spat between the president and a Fed official, and you start worrying. Or you get those old seasonal myths like, oh, August is always a terrible month, or watch out for September. But honestly, basing your strategy on that stuff is like trying to navigate a hurricane with a kite. The real signal, the stuff that matters, it comes from the data. We're talking about key technical trends and, right now, some pretty solid corporate earnings.
So you're probably asking, okay, how do we actually find that signal? Well, one really powerful tool for this is called the super trend indicator. It's designed to do one thing, and it does it really well. It cuts through all that short-term mess and just shows you the main direction of the market. It's super simple, too. When the indicator is green, the trend is up. When it's red, the trend is down. It just helps us ignore the daily panic and focus on the bigger picture.
And check this out. Here's what that indicator is telling us right now. In spite of all the fear, all the pullbacks, all those scary headlines you see on the news, the super trend for all three major U.S. indices, that's the S&P 500, the Nasdaq, and the Dow Jones, has been signaling buy since all the way back in April. That tells us the long-term uptrend is still very much in place. That is the signal. All right, let's switch gears and talk about the hottest sector in the market, maybe on the planet right now, artificial intelligence. I mean, everybody's talking about it, right? And the big question is, are we in some kind of massive bubble, or are we just at the very beginning of something huge?
And you know what? That's a totally fair question. You see these reports that a lot of these exciting AI companies, well, they aren't actually making any money yet. They're just burning through cash to try and be the next big thing. And that sounds a lot like the dot-com bubble, doesn't it? Well, maybe not.
You got to think about this like an old-school gold rush. In Phase 1, the people who really get rich aren't the miners digging for gold. Nope, it's the folks selling them the shovels and the pickaxes. In the world of AI, that's your NVIDIAs making the chips and your Amazons providing the cloud space. They are the ones profiting right now. We're still in that shovel phase. The actual gold rush, where the big, dominant apps that we all use every day finally emerge, that's still coming.
And here is the absolute crucial difference between now and the dot-com bubble back in 2000. Back then, you had unprofitable startups being funded by little more than venture capital hopes and dreams. Today, a massive chunk of AI development is being funded by the incredibly deep pockets of giants like Microsoft and Amazon, companies that are already making tons of money from their other businesses. They can afford to play the long game, and that gives this whole revolution some serious staying power.
Okay, let's shift gears again. We're going from the fairly structured world of stocks to, well, the wild west of crypto. It can be super volatile, it can be confusing, but even here, we can find a signal if we know where to look.
So to really get what's been going on with crypto's recent choppiness, you have to understand the concept of whales. And no, we're not talking about the ocean. In crypto, whales are people or groups that hold enormous amounts of a coin. They can literally move the entire market just by selling a chunk of their holdings. And this whale activity is the main reason for all the recent noise and volatility. They can create these sharp drops to shake out traders who are over-leveraged.
So how do you navigate all that? Well, if we look at the major assets, the picture is pretty different for each one. For Bitcoin, the short-term outlook is a bit cautious, mainly because of that whale selling pressure. But then you look at Ethereum, and the outlook is actually more bullish. Its technical trend just looks stronger than Bitcoin's right now, which is why it's a preferred asset. And then you have Ripple, which is still a high volatility game. More risk, for sure, but also potentially more reward for traders who are comfortable with those wild swings.
So what's the bottom line here? The short-term noise is all about the whales.
But the long-term signal for crypto is still tied to rising global liquidity. As long as that bigger trend stays positive, the expectation is that the crypto market will eventually move higher.
And for our last stop, let's take a look at precious metals. Because right now we're seeing a really interesting split between two of the most popular ones.
Yeah, there's a really clear divergence happening here. Gold's price action right now, it's pretty much all noise. It's just stuck in a range, going sideways with no clear direction. That's why there's no recommendation for new buys. Silver, on the other hand, is giving off a very clear signal. It's in a classic uptrend, making higher highs and higher lows, and for now, that clean momentum makes it the preferred precious metal of the two.
Okay, so we've looked at stocks, AI, crypto, and metals. What's the one big lesson we can take away from all of this?
It really comes down to this. The greatest skill you can have in today's market is separating the daily noise from the long-term signal. All that political drama, those old market myths, the games the whales play, it's all noise, and it's designed to make you react with emotion. The real signals, you find those in the durable trends, in strong fundamentals, and in the overall flow of money around the world. Being able to tell the difference, that's the key to success.
So I'm going to leave you with a question to think about. As you go about your week and you're looking at the markets, ask yourself, what is the one true signal you're going to focus on, and how are you going to filter out all that distracting noise?
Hey, thanks so much for joining us. We really appreciate it. And of course, your subscriptions and likes always help out the channel.